Fabrice, thank you for joining us to talk about risk management. Let's get straight into it. Could you tell us a bit more about the committee and the board and their role in risk management and how they all fit in?
Yeah, sure. I mean, what's really important is governance. This is where everything flows from. And if you look at the system that we've put in place within Hiscox, it starts with the board, who have a majority of independent directors who are holding the exec accountable. Then we've got a cascade of committees. So below the board, we've got a dedicated risk management committee. We've got subcommittees for insurance risk. We've got a subcommittee for the other risk types. And then we've got a whole host of committees working below that. And the idea is that we address the risk at the lowest level possible, and we escalate anything that is systemic up the chain. Again, starting from the board, from the senior management, but also the tone from the middle, because what's really important is that everyone feels that they're involved in risk management within the company.
I also think the risk committee is a real enabler as well in terms of a bridge between management and the board, so they're really vital, like you say. What do you feel are the most important aspects behind a strong risk strategy?
I think what's really important is that the strategy of the company and the risk management strategy are completely aligned, and that one reinforces the other. So within risk management, for example, we want to make sure that colleagues feel free to take a certain number of bets, but these are calculated bets, and then on average, the reward is going to be better than the downside. And that alignment is really important, which means that the risk management strategy will be different for a company A compared to company B, for example. So it's not like one size fits all, but the risk management strategy will fit in what also the strengths and the weaknesses of a given company.
Okay, perfect. And then do you feel that it needs to be a dynamic strategy now?
Oh, completely, I think, because the business is evolving all the time, the competitive landscapes, the risk that we're looking at, and a lot of emerging risk and so on. So we need to constantly adapt and course correct. And also businesses get more mature, but I think as new threats emerge, they also need to develop new muscles. So it means that we need to constantly adapt our risk management framework to that.